Hello guys, this is Arun. Welcome to the fourth session of this course where we'll be studying particularly order blocks. Now this will be very important because order blocks is one of the most popular POIs that we see in all kinds of market, and specifically if you trade gold and silver, then order blocks are something that is really respected in this kind of markets. And it's not only gold and silver. Order blocks are, you can say, the most important zones that markets respect fundamentally in all kinds of market, whether it's commodity or crypto or stock market or indices, doesn't really matter. Order blocks are the most important POIs to watch for. So we'll go in detail and we'll understand what order blocks are and what types of order blocks are the most powerful ones. And also we will see when there are multiple order blocks, which one to give the most preference. And then we'll also see some examples that will help us to understand how to watch these order blocks and how to take entries from these order blocks. Okay, so let's start with this class, and this is going to be a master class in order blocks. So I hope you have fun while going through this class, and also once you watch the whole session, you go to your charts, whatever you trade, and watch the order blocks, find out the order blocks in the different time frames such as 1 hour, 4 hour, daily, weekly, monthly. Don't go below 1 hour time frame because I've already told you we do not really look for POIs or liquidities below 1 hour time frame. So make sure you follow 1 hour time frame and above to find the order blocks and look for entries from those order blocks and see if market actually gives you your entries or not. Okay, so let's start with this class. So till now we have understood how a market moves. A market has two things: POI, which is a point of interest, like order blocks, fair value gaps. So you have already written here. There are two types of point of interest, basically gaps and blocks. Inside gaps there are multiple stuffs like FVG, which is the most important and the most popular one. Then there is imbalance. Then there is BPR, which is balanced price range. Then there is VI, which is volume imbalance. And there is GI, which is gap imbalance. So we will do a different session for gaps, but today we'll be focusing on blocks. And inside blocks there are mostly three important kinds of blocks that you see in the market. First, we have got order block, which is the most important one, which we'll be studying in this session. Then we have got mitigation block and also breaker block. Okay, so mitigation and breaker, they are very, you can say, similar to each other, but there is a small difference between them. But overall, mitigation and breaker, you can see they are same stuff. They're the same kind of POI, same kind of blocks, and we will do a different session on mitigation and breaker block as well. But today we'll be only focusing on order blocks. And I've also told you inside market there are liquidities. Now what are the types of liquidities? Again, a different session will come on liquidity as well. But till now we've understood that inside any market there is a POI and there is a liquidity, and market always moves from a POI to a liquidity, and this is what is called a bias of the market. And we always trade according to the bias of the market. We take our entries from the POI and we target the liquidity. I hope I'm not going too fast. If it's too fast, then you can slow down the video a bit so that you understand what I am telling about. And if this is the first time that you are learning about order blocks or learning about these concepts in general, maybe it will take some time to grasp these concepts. So you can watch the videos again and again till everything gets clear. And also make sure you also practice this in your chart. That will help you immensely. Okay, so today we'll be studying about order blocks specifically, and we'll be seeing what makes a block an order block and what is a valid order block. Okay, so let's start. Okay, so here you can see there are some rules you can see that you have to follow in order blocks, and to find those order blocks you have to follow these rules. Number one is color. Then there are some other rules as well. We'll talk about that, but first one is color. So what does that mean? So for buying, as you can see over here, initially, now just focus on this one, okay, just this one. So market dropped initially and then market starts to push higher, right? So this is for buying, right? Because market has reversed and market has started to push higher. That means we are looking to buy. So here, if we want to find an order block, we have to focus on the last selling candle before the buy. So before the buy, that means before this pushing higher, what was the last selling candle? Last selling candle means the last candle which created the low before market started to push higher. It's very clear that it's this candle over here. That means that this candle will become what? This will become our order block candle, right? It's very clear that just after this candle, market started to push higher, and this was the last selling candle, right? Selling candle does not mean that it has to be a red candle. Selling candle means the candle which gave the most selling before pushing higher, before reversing. That is the last selling candle. So whenever market is pushing higher and you want to find out the order block, that means order block means what? That this is where huge amount of buyers like the institutions, the hedge funds, they came in. That means the big players came in and they put huge amount of orders and they pushed market to the upside. But what happens is that since their volume is much higher and the market cannot really provide them that kind of liquidity for them to take their entries. What does the liquidity mean? That means that if they want to buy from here, let's say they want to buy 1000 quantities of whatever they are buying, doesn't have to be coal, it can be anything. So let's say they are buying 1000 quantities of a stock from this level. But for them to buy 1000 quantities, there also have to be sellers who are selling them 1000 quantities. Only then they can buy from the sellers, right? But the market does not have 1000 sellers. Let's say the market has 700 sellers. So what they will do is they will buy the 700 quantity from here, and when they will buy, you will see this kind of massive buying candles one after another. So they've already bought 700, but their plan is to buy 300 more. So what they will do is once market goes up like this, once market shows a strong recovery, they will sell off their positions from here. And when that happens, market will drop once again to here. And once market drops, gives a pullback. That means now the sellers are coming in once again in the market. When that will happen, they will buy 300 quantity more, right? It can also happen that they buy a little bit more. Let's say they buy 800 or maybe 900 quantities and they sell off 200 quantities over here or 300 quantities over here, and market drops to the downside. And once that happens, they will buy 300 more, 400 more, however they need to fill up their 1000 amount of quantities. And once that happens, once they buy once again from this zone, what will happen? Market will push once again to the upside from this zone, right? So this is how market actually moves. This is only based on simple supply and demand concept, right? And this is how order block works. So this is what an order block is, where the massive amount of order has been filled and where the big players come into the market. So this is like a footprint of the big players, right? So that's the reason whenever market comes to this zone, we will also be looking for buying opportunities. Okay. Now, like I told you, that it does not have to be that the last candle which is given the most selling before the buys is a red candle. Like for example, over here, market was dropping and then market opened, gap down, market opened over here and then market closed higher, right? So this is a green candle now. And after that, market continues the upside movement. So here, the last selling candle is not this candle because the low of this candle is over here. But the low of this candle is actually over here. So that means in this case, the last selling candle is actually this green candle, right? So in this case, this is going to become our what? Our order block candle. So once again, when market comes down to this zone, we will be watching to buy from this zone and we'll be looking to take it higher, right? So this is what an order block is. Whenever you are looking for buying, always you have to see which candle gave the most selling. That means the last candle which has created the low before pushing higher. This is what an order block is. Okay, now this is for buying. Now what will be for selling? For selling, you have to just do the opposite. You have to focus on the last buying candle. Here you can see market was pushing higher and then market started to drop, giving strong displacement. Now here, this is going to be our last buying candle. So this will become our what? This will become our order block candle, right? So once again, the color does not matter. If you look at this case, then in this case, this is the red candle which is given the highest buying, and in this case we will be considering this candle as what? As the order block candle. Okay, so the color of the candle, the color of the order block candle does not matter. Order block for buying will be the last candle which is given the most selling, and for selling it will be the last candle which is given the most amount of buying. Okay, so this is what the order block is. This is how you find an order block. The color of the order block candle does not matter. Okay, now for example, let's see over here. Now this is the daily chart, and in the daily we can see that over here, if you look at this leg to the upside, then this will be our order block candle, right? In this case, sorry, this will be our order block candle, but actually this is the order block candle. I'll tell you why, because there are some more reasons, there are some more rules that you have to follow for a candle to be an order block. So in this case, even though this was the most selling candle, but this is actually the order block candle. Once again, I will tell you why. So what happened after market came down, market tapped over here and market displaced to the upside. And after that, you can see what happened. Market continued to the upside and market went from this point of interest to the liquidity, which would be over here, right? So this is how an order block works. Once again, if you see over here, market dropped, tapped into this order block candle, and from here, market pushed higher and market took out these liquidity. Right? So this is how an order block works. Now this is for buying. For selling also, similar kind of thing can be seen. Here we have this last buying candle, and I told you for selling we will focus on the last buying candle. So market taps this and market drops to the downside. But obviously market could not come all the way down to take out this low. Why? Because the higher time frame structure was bullish, and even though there was a reaction, but market could not drop, market once again pushed higher to target this liquidity. Okay, so this is how an order block works. Even here you can see that market dropped and market has tapped into these daily order block candle, and from here you can see the kind of reaction it has given us. Okay, so this is what an order block looks like. Okay, so the order block candle's color does not matter. It can be green, it can be red. That does not really matter. Okay, so here you can see this is a red candle, right? But we're considering this as the order block. Why? Because this is the highest selling candle before market pushed to the upside, and this is why this is our order block candle. But once again, there are some more reasons, some more rules to follow that we'll be talking about next. Here you can see this is a green candle, and after that market pushed higher, so this becomes our order block candle. Once market comes down, taps into this order block, so from here we'll be looking for buying opportunities, right? This is the daily time frame. You can find order blocks in weekly time frame as well, doesn't really matter. Here you can see market came down and market tapped into these weekly order block candle, and from here market pushed higher to take out this weekly liquidity, right? So this is a POI, so market drops to a POI, goes to a liquidity. So POI to a liquidity move, that means we have got our bias of the market, right? So here again you can see that market has dropped, and this is the recent price action, and market taps into this candle, and after that market pushes higher once again. Very strong rejection from here. So order block is something which is very strong, very powerful, and this can be used in all the time frames, like I've told you, in the weekly, in the daily, and in the 4 hour, in the 1 hour you can use them. But once again, do not go below the 1 hour time frame. Okay, we do not go below 1 hour time frame, because below 1 hour it's not very standard to look at the price action. You will just see noise over here. Okay, so till 1 hour you can follow the POIs and also the liquidity concepts, but do not go below 1 hour time frame. Okay, so till now we have understood what an order block is, and we have also understood that the rule number 1 says that the color of the order block does not matter. Okay, it does not matter. Okay, so I think you should be able to find order blocks now. Now this is for gold. You can do this in any kind of market. Let's look at silver. So you can do the same in silver as well. In the daily, do we see any order block over here? So yes, very clearly I can see that we have got a very recent order block over here, and market has tapped into it, and now it is trying to displace from this order block. And once again for selling, we see that we have got this order block candle, and market taps into it and market drops from here, right? And once again, the color of the candle does not matter. Here for buying, we're looking at a green candle, and also for selling, we're looking at a green candle. So the color of the candle does not matter for a candle to be an order block. Okay, so keep that in mind. Okay, now the second rule. Second rule is FVG. So what does that mean? FVG means fair value gap. We already know that, right? But important thing is, for a candle to become a valid order block, there must be a fair value gap along with it. Now this is the most important thing. For a candle to become an order block, there must be a fair value gap along with it. Now watch this example. Market drops, right? And then market pushes higher. So in this case, we have got this as the last selling candle, and along with this, we have got a fair value gap, right? What is a fair value gap? I already told you, when there are three candles where we have got this as the first candle, this as the second candle, and this as the third candle, the first candle's high and the third candle's low, if they are not in contact with each other, then the gap between these two candles is known as fair value gap. So in this case, we have got this first candle, which is the last selling candle, or you can say which gave the most selling, and after that, along with it, we have got a fair value gap. That means that this candle is a valid order block candle. This candle is what? It's a valid order block candle. Okay, so for a candle to become an order block, it must have a fair value gap along with it. What is this? This is a fair value gap. If we don't have a fair value gap, will this become an order block candle? Then the answer is no. If a candle has to be an order block, we must have a fair value gap along with it. Now look at this example. Here also market was dropping, and after that market started to push higher. So in this case, this is the last selling candle, right? So is this going to be an order block candle? What have I told you? I have told you that for it to be an order block, there must be a fair value gap along with it. Is there any fair value gap here? Then the answer is no. That means that this candle is not a order block candle. This is not an order block candle. Okay, this is not an order block candle. Okay, so keep that in mind. Once again, see here, this is another example, and here once again we have got a buying upside momentum. And now if we want to find an order block, then this is the last selling candle, and is there any fair value gap along with it? Then the answer is no. That means, is this candle an order block? Then the answer is no. This is not an order block candle. But if we look at the next candle, which is this one, then with this candle, what do we see? We see that there is actually a fair value gap. That means that now this candle can be considered as an order block candle. Why? Because along with this candle, we have got a fair value gap. Okay, so I hope you understand this. This is very important. If the last selling candle does not have a fair value gap with it, this is not going to be an order block. But if the next candle, or if the next candle has a fair value gap with it, this will be an order block. So whenever you see a fair value gap, just the adjacent candle with it will become an order block if below that there is no fair value gap. Let's say there was another candle over here like this. Just for an example, let's say there was another red candle over here. in this case, and let's say we do not have any wicks on this one. In this case, and let's say we do not have these candles at all, right? So let's say this is how the price action looks like. And let's say before that, we have got some more candles, which is coming from above. So market was dropping like this. So in this case, will this become an order block candle? Then the answer is yes. Why? Because along with it, we have got a fair value gap. In this case, this will also become a fair value gap candle, right? Because why? Along with this one, we have got a fair value gap. Another example, now this is for selling, all of these were for buying. Now this is for selling, so market was pushing higher and then market starts to drop lower. So first of all, we see the candle which gave the most amount of buying, which in this case is a red candle. So now is this candle an order block? So the question is that along with this candle, is there a fair value gap? And the answer is yes. We have got a fair value gap. That means that this candle qualifies as what? As an order block candle. Okay, so this will become our order block candle, and below that we will have what? We will have fair value gap. Okay, another example here, market was pushing higher and then started to drive lower. So here, is this an order block candle? Then the answer is no. Why? Because there is no fair value gap. You can see that the low of this candle and the high of this candle, they are in contact with each other. So there is no gap between them. So there is no fair value gap. That means that this is not an order block candle. Is this candle an order block? That once again, the answer is no. Why? Because the low of this candle and the body of this candle, they are in contact with each other. That means there is no fair value gap. That means that this is not an order block candle. So that means there is no order block over here. Now if you look at this example, then over here we can see that this candle is in adjacent with this candle. That means there is no fair value gap between them. That means that this candle is not an order block candle. But if we focus on this one, then we can see that this candle's low and this candle's high, which is over here, they are not in contact with each other. So there is a fair value gap in between them. That means that this candle now becomes an order block candle, right? And below this, we have got what? We have got a fair value gap. We have got what? We have got fair value gap. Okay, so always if there is a fair value gap, then that adjacent candle will become an order block. If there is no fair value gap, then it is not an order block candle, even if it has given the most buying when we're looking for selling order block. Okay, so this is a very, very important point, and that's the reason that I actually considered this candle as the order block candle, even though this candle actually created the swing low before pushing higher. I did not consider this as the order block. Why? Because along with it, there is no fair value gap. But along with this candle, we have got this fair value gap over here, and that's the reason I considered this candle as the order block, and above this we have got a fair value gap. Okay, and you will see all the order blocks that I have marked, all of them have fair value gaps along with them. You see I've marked this one, and along with it we have got a fair value gap. Again, we have marked this one, along with it what have we got? We have got a fair value gap. So this is the most important part, that if a candle has to be an order block, there must be a fair value gap along with it. Even in the weekly, I marked this as the order block. Why? Because along with it, we have got a fair value gap. Okay, if there is a fair value gap, only then there will be an order block. If there is no fair value gap along with it, then we cannot consider it an order block candle. Okay, so keep this in mind. This is very, very important point, and this will help you immensely in any kind of market. Whenever try to find an order block, always make sure there is a fair value gap along with it. Okay, now we will talk about rule number 3, which is premium and discount zone. So that means what? That means now we're trying to understand where should we find an order block. We cannot just find an order block anywhere inside a market. So where should we find an order block? So to find an order block, first of all, I will remove everything so that it becomes clear. Okay. So first of all, you have to understand what is a swing. Swing means something like this. Let's say market is moving like this. So let's now consider this leg. So this move from this low to this high is called a swing. Okay, this is called what? This is called a swing. Okay, and now once you find the swing, what you will do is you will take the Fibonacci, you will put it at the low, and you will take it to the high of the swing. And once you do that, you will see that you see some levels over here. You can also go to the settings and change them. So here I'm using these levels: 0, 100%, then 0.786, 0.618, 0.5, and 0.382. Okay. Now, the 50% level, which is 0.5, this is known as the equilibrium level. Okay, this is the equilibrium level of this swing. Now, any order blocks below 0.5%, this is where we'll be looking for an entry. Let's say if there is an order block candle at 38%, we're not going to be interested to take an entry from this order block. Rather, we'll be watching for if there is an order block below 50% level. If there is an order block, let's say over here around 61%, then this is where we'll be interested to look for an entry using our entry models. Okay. Okay, so now let's see some examples of premium and discount zones. Always remember that we buy from the discount zone, which is below 50%, and we sell from the premium zone, which is above 50%. Okay, so now let's see some examples. So here I can see market started to push higher from this low, and we can see some swings over here. So this is the first swing, but here we do not see any order block. So we will focus on this next swing over here, right? We have got this low and we have got this high, right? So we'll be focusing on this one, and we'll be selecting our Fibonacci tool, tap it at the low of the swing and drag the high of the swing. And this is where we'll click and leave it. And this will give us some levels over here on the right side. As you can see, we have got the 50% level, which is the equilibrium level of this swing. And below that, this is where we'll be looking for an order block because we are looking to buy gold. So here I can see that this is the order block, and once market taps into this order block, we'll be looking for buying opportunity. Now, I've already told you that if it's a daily POI, in this case, it's the order block. So our entry model, according to the time frame alignment, will be 1 hour time frame, right? So we will go to the 1 hour chart and we will look for an entry from here. And what will be our target? Our target is going to be the high. Why? Because we are entering a daily POI, and our target will be a daily liquidity. In this case, it is going to be this high over here. So now I'm going to remove this, and we're going to the 1 hour, and we'll be looking for an entry on this zone, and we will be targeting this high over. Let me just mark this high. So now let's go to the 1 hour. Okay, so in the 1 hour, I can see that market has tapped into this zone, this daily order block, and here, as you can see, market has given us market structure shift, right? In the 1 hour, market dropped into this POI, created high, and once again dropped to take out the last, and then market broke above this last high, giving us a market structure shift in the 1 hour time frame, right? So this is our confirmation for our entry. And most importantly, I told you, along with market structure shift, we also must see fair value gap being created. So as I can see, market has also created fair value gap along with market structure shift. So now that we have got our confirmation, we can take our entry from the fair value gap or from the order block. Basically, most of the times what will happen is, if market did not create a fair value gap already, in that case, market will just tap the fair value gap and market will push higher, right? But in this case, market has already created a fair value gap beforehand, and after that market created another fair value gap to break above the last high to give our market structure shift. In this case, there is a very high chance that market will come down and tap into this order block over here, which has been created with the last fair value gap, which has given our market structure shift. Okay, so in this case, you can take your entry from the order block, or you can also refine your entry. It taps into your 1 hour POI. You can go to the 5 minutes to look for an entry with the same market structure shift model. From there, you can take your entry. In that case, your stop loss will be according to the 5-minute structure, and that will give you a massive risk to reward, because you know your target is going to be the daily level. But once again, you do not want to refine the entry by multiple time frames, and you don't want to refine one single POI into multiple lower time frames. So in that case, what you can do is you can just take your entry from the second order block which market has created here. This is the first order block, and stop loss will go obviously below the last swing low and not below the recent order block, right? Because this was the last low which market created before breaking the structure to the upside. And what will be our target? Our target is going to be a daily liquidity level. That means this last high which market created before pushing to the downside to our POI. This will be your trade setup, and this will give you a very nice risk to reward, and this will be a very clean trade. As you can see, market was sideways for a while, but then market started to push higher and will finally give you your target. Now this is one entry model, right? And I'll show you another entry model in this same example. Once market taps into your POI, and immediately after tapping into the POI, if market gives displacement, you see multiple candles over here, right? And this is the candle which created the last swing low into this daily POI, into this order block. So here you see multiple candles. We have got basically 3 candles immediately which were created after tapping into the daily POI, right? So once we see this, what we can do is we can actually mark this fair value gap and the order block. And once market taps into the POI, you can go to the 5 minutes time frame and look for an entry from this 1 hour POI. And if you have that, then you can take your entry from the 5 minutes structure. And in this case, you're taking your entry from a 1 hour POI rather than the daily POI itself. In that case, your initial target has to be a 1 hour liquidity. That means in this case, if you're taking your entry from here, so your entry will be from here. So your initial target is going to be the last one high, which will be over here. And once market takes out this high and continues higher, you can book partial and you can hold the rest of the trade to the daily, because you know you are entering actually from a daily POI, and you can hold all the way to your target. But in this case, you can see market actually dropped from here and then took out the low. Obviously, we're not going to hold the trade with the stop loss over here. Once market pushes so much, move your stop loss to break even once you book your partial at the initial target, which is 1 hour liquidity. You have to keep in mind that the time frame from which you were actually looking for entry, you have to book your partial according to the liquidity of that time frame. So since in this you're actually entering from a 1 hour POI, your target is going to be a 1 hour liquidity. This will be your initial target, and after that you can hold the trade for the daily target as well, because after all we are entering from a daily POI and our final target is the daily liquidity level, right? So it's another entry model, because all the time you are not going to see market structure shift levels. Maybe there is no market structure shift over here and market just drops like this in a very strong manner, and there is no market structure shift level over here. In that case, you have to find this kind of displacement candles along with POIs. You have to mark the POIs and look for an entry from those in the lower time frame, okay, and adjust your targets accordingly. And remember, you can use the same concept, same entry model in different time frames as well. Let's say this was a weekly POI. In that case, you can look for this kind of displacement candles in the 4-hour time frame, right? Let's say this was a 1 hour POI. In that case, you can look for this kind of displacement candles in the 5-minute time frame, okay? And after that, you can look for an entry from the 5-minute POI. Okay, so I hope that is clear. That's very important. This is one of the most used entry models, because if you wait for the market structure shift all the time, you are going to miss a lot of trades. Okay, so keep that in mind. So this is how you use your premium and discount zones. Now this is for a bullish market, so market is pushing higher. That's why we're looking for buying opportunities. The same can be done for selling opportunity. Let's say you are a seller in gold and you want to sell from this order block, right? So we have got this as the swing high and this as the swing low. So what you will do is you will put your Fibonacci from the low to the high, and like I told you, you will be looking for selling above the 50% level. So above the 50%, is there any order block over here? So yes, we have got order block. So you can actually look for a sell entry from this order block with confirmation in the 1 hour time frame, because this is a daily order block. And from here you'll be looking to sell, but once again market could not actually come all the way down to sweep out this liquidity because the overall structure was bullish and our bias was also bullish in gold. So that's how you trade Fibonacci, and that's how you trade premium and discount zones. Okay, always remember that you buy from discount and you sell from the premium level. Premium is above 50% and discount is always below 50%, where we'll be looking for a buy opportunity. Okay, now let's talk about what is the most powerful type of order block. So you have learned about inducement, right? So see here, there is an example of a chart, not a chart, but an outline of a chart where we have got market pushing higher. So this is a bullish structure and market gives a break of structure over here, right? And market has created this as the last low on the left side before creating this break of structure. And then market drops, takes out this low on the left, which is known as inducement, as I've already studied. And just below this inducement, if there is an order block candle, we'll see some examples that will make it much more clear. If there is an order block, that is a very powerful order block. Most of the times market will come down, take out this low over here, which will be an inducement, and below the inducement there is an order block candle. This is where we'll be looking for an entry and we'll be targeting the liquidity over here, which will be this high. So this will be your entry. Okay, and this is one of the most powerful and most seen order blocks in the market. Let me show you some examples. So this is the daily chart, right? So in the daily, we can see that market dropped. So what is the inducement level here? It is going to be this low, right? So what market does is market comes down, market takes out this low, and just below this low, we have got this order block. See what market does. Market comes down, takes out this low, inducing sellers that market is going to go down. But instead what it does is market taps into this order block, and from here market reverses. So with confirmation, you can take your entry from this order block and you can target the last high according to the structure, because you're entering from a daily POI. So your target is going to be a daily liquidity. So in this case, you can see that market displaced quickly from this order block and market continued higher to target your liquidity, right? Let's see some more examples. Here also I can see that market dropped to the downside, taking out this low. This was the inducement. And after market takes this, what is there below this? We have got this order block candle, right? So market taps this, and after that, just look at the way market has moved, right? So the order block just below the inducement is the most powerful order block from which you can look for an entry. Obviously, you have to use confirmation, but if there is an order block just below an inducement level, in that case, you must focus on that order block if the first order block fails. So this was the first order block, right? So if this fails, then you have to focus on the order block just below this low. And you can see how market reacted from this order block. Similar thing has happened over here as well. So this is one of the most powerful setups that you can trade in the market. When market creates a new break-off structure and then market drops, takes out an inducement, and below that inducement level there is an order block. So you can look for an entry from that order block, because there is a very high chance that it can actually reverse after tapping into that order block. Another example of a powerful order block is when market sweeps out a low. That means after market takes out a liquidity, in this case, you can see that market was pushing higher, it was bullish, and then market drops all the way to sweep out the last low, which created this high. And once market takes out this, market pushes higher, gives out market structure shift. So after sweeping a low, if market displaces on the upside, giving market structure shift, in that case, the first order block that will be created here will be a very powerful order block. So after that, whenever market will drop and tap into this order block, you will see strong displacement from this order block. Now this does not happen often in the market because mostly market moves from a POI to a liquidity. So a liquidity to a liquidity move is not very often seen, but whenever that happens, whenever market sweeps out a low and then market break structure on the upside or on the downside. Now we are talking about a bullish market. So on the upside, whenever the market will break the structure and market will create an order block over here, in that case, this will be a very powerful order block. So when market will drop, tap into this order block, make sure you look for an entry from this order block, and market will displace from this order block very quickly, because I've already told you how these order blocks are created. These are the zones which has pending orders of the institutions. So once market comes down, market will tap into this zone and very quickly market will displace from these zones. Okay, so these are the two most powerful kind of order blocks that you see in the market. Now this structure, this setup can be used in any kind of time frames, whether it is 1 hour, 4 hour, daily, weekly, in all the time frames. This will be a very powerful kind of order block that you can look for. Okay, now let's start another concept, in which case, let's say there are multiple blocks. So let's say, just like we have studied multiple fair value gaps, what happens, which one to give preference. Similarly, let's say that there are multiple order blocks. So let's say market is like this, it's in an uptrend and market creates multiple order blocks. We have got one order block over here, we have got one block over here, we've got one order block over here. In that case, which order block should you give preference? Obviously, you will be marking all the order blocks, but most importantly, the first order block and the last order block, they are the most important ones. Okay, the first order block and the last order block, that means one and this one. Okay, so this is all about order block, and it's a very important concept to understand, and I hope that you understood what is an order block. So that's it for today's class. In the next class, we'll be talking about mitigation block and breaker block, and after that we'll be discussing liquidity as well on a separate video. So that's it for today. I will see you in the next one. Till then, take care and trade safe.